Welcome, everyone. Today we're taking a deep dive into the world of credit cards in India. We're going to be looking at this fascinating document, The Hidden Truth about Credit Cards in India. And I have to say, just going through it, I learned a lot.
Yeah, it's amazing, isn't it? The Indian credit card landscape is, well, it's really transforming right before our eyes. And this document really captures all of that.
Absolutely. It's crazy to think about how the first credit card, the Diners Club card, appeared way back in 1961. Can you even imagine a world without, these pieces of plastic in our wallets?
I mean, it's hard to picture now, right? The document actually, it does a really good job of taking us through that entire history. From when the first bank credit card came out, that was the Central Bank of India in 1980. And then a little later, PSU banks came in 1988, and that really helped with wider adoption. But even then, for a long time, credit cards were really only for a select few.
Yeah, definitely not something everyone could just get. Even now, with all the growth we've seen lately, India's credit card penetration is still pretty low. This document points out that it's only about 5.5% as of April 2023, which is surprisingly lower than some countries like Malaysia and Thailand.
Yeah, it is a bit surprising, especially when you consider how much credit card use has exploded recently. So it makes you wonder, what's driving all of this growth now? The document points to a couple of things, like a growing middle class with more money to spend, and also just people getting more comfortable with the idea of using credit.
Yeah, that makes sense. People have more money to spend and they're more willing to use credit. But I think the government's push for a cashless economy is playing a big role too, right? I mean, digital transactions are going up, and credit cards are a big part of that.
Oh, absolutely. The document really emphasizes how credit cards are helping with that shift, making things more transparent and reducing our dependence on actual cash. It's kind of a win-win for both consumers and the overall economy.
Speaking of the economy, it really surprised me to learn that responsible credit card use can actually help make the whole economy healthier. I always thought of them as more of a personal finance thing.
It's an interesting point, isn't it? So what the document explains is that when people use their credit cards responsibly, they build up their credit history. And then that makes it easier for them to get loans and mortgages. And that leads to, well, what the document calls healthier lending cycles, which helps everyone, both individuals and the financial institutions.
So it's like a chain reaction. People use credit cards well, their credit scores get better, and then the whole lending system gets stronger. And that actually boosts economic growth.
It's crazy to think that little piece of plastic in our wallets could have such a big impact.
Yeah, that's the thing. But of course, like with anything powerful, you have to be careful. And that brings us to the other side of the coin, the potential downsides of using credit cards. The document goes into a lot of detail about the costs that people often don't even realize are there, and some of it's pretty alarming. You're right, it was definitely a wake-up call to read about those hidden fees. Like, I had no idea late payment fees could get up to $500. That's a pretty big penalty for just a small slip-up.
For sure. And what's even more worrying is that, and the document makes this clear, if you miss several payments, those fees can pile up really fast, and you can end up trapped in a cycle of debt.
Yeah, it's scary to think about how quickly those charges can add up. And then you have those no-cost EMI deals. They sound so good. But the document really lays bare what's going on behind those offers. They're not really no cost at all, are they?
No, not really. The document breaks down how they often sneak in processing fees, which can be anywhere from 1% to 2% of the total cost. And here's the real kicker. They also charge you GST on the interest that they waived.
Wait, hold on. GST on waived interest. What does that even mean?
Yeah.
I have to admit that one went right over my head.
It is a little complicated, but basically, well, it means that even though they're saying they're not charging you interest, they're still slapping on GST on that interest that you're not even paying.
So it's kind of like a bit of a trick, really.
You could say that, yeah. It's one of those hidden costs that a lot of people just don't realize. And these little charges, they can really build up, especially when you think about how much personal debt is rising in India.
That's true. The document does paint a kind of a worrisome picture of those rising debt levels, especially with the whole thing about these tiny loans. I actually hadn't heard that term before reading this. What are tiny loans exactly?
So tiny loans, the way the document uses the term, are these small short-term loans you can get, usually through apps and online platforms. They're often advertised as a super quick and easy way to get cash, which can be appealing, if you have an unexpected expense or, well, if you just get tempted to buy something you don't really need.
Right, it's like instant gratification, but with a cost that comes later. The document was saying that a lot of people are using these loans for things they want rather than things they actually need, right?
Exactly. And that's where the problem comes in. Using credit for, non-essential stuff on top of all those hidden fees and charges, it can easily lead people into a debt spiral. And it's even more concerning with the cost of living going up all the time.
That's a tough situation, isn't it? Credit cards are convenient, and they can be a lifesaver sometimes, but if you're not careful, they can be a real problem.
For sure. And the document really emphasizes that. It gives this pretty stark statistic. The average credit card debt per borrower hit a record high of $6,360 by the end of 2023. That's a lot of debt for the average person to be carrying.
Wow, $6,360. That's a big number. It definitely makes you think twice about misusing credit.
Yeah.
Have you seen this trend of people having more credit card debt, like with people you know? I feel like it's something we're hearing about more and more these days.
Yeah, I've definitely noticed something similar. It seems like credit cards are just everywhere now. And that means there's more opportunity for people to benefit, but also more risk. It really highlights how important it is for people to understand how to manage their finances, wouldn't you say?
Oh, absolutely. People really need to understand the ins and outs of credit cards, especially with all these hidden costs and, well, the temptation to spend more than you can afford. The document actually talks about that, how the lack of awareness about these potential pitfalls is a real problem.
Yeah, it's definitely a critical issue. We need to make sure people, especially younger generations who are using more and more digital financial tools, have the knowledge and skills to navigate this whole system responsibly.
That's so true. And speaking of younger generations, the document also mentions this really interesting trend. Millennials and Gen Z, they're embracing credit cards, seeing them as an essential part of managing their money. Why do you think that is?
I think it's probably a few things. They've grown up with the internet and everything being online, so managing their finances digitally is just normal for them. And I think they're also just more open to new financial products and services.
Right. They see credit cards as just a normal part of their financial lives, not something to be scared of. And that kind of ties into another big trend that the document talks about, the digital transformation of the banking industry. Things like digital credit cards and being able to apply for a card instantly. It's made it so much easier to get credit.
Absolutely. Things are changing so fast. The document actually predicts that India could have 100 million credit card users by the beginning of 2024. That's a huge increase in a very short time.
100 million users. What do you think that means for the overall financial landscape in India?
Well, on the one hand, it's a good thing. It shows that more people are getting access to these financial tools that can help them manage their money better and build up their credit history. But on the other hand, it does make you wonder about the potential downsides, right? If everyone's jumping on the credit card bandwagon, couldn't that also lead to more problems? It makes that whole idea of financial literacy even more important.
Yeah, definitely. It's great that more people have access to these tools, but we need to make sure they know how to use them responsibly. Otherwise, we could see a big spike in debt and people struggling financially. The document really makes a strong case for using credit cards responsibly. So, for our listeners who are thinking about getting their first credit card, or even those who've had one for a while, what's the most important advice you would give them?
Well, I think the first thing is to really understand your own situation. Take a good look at your spending habits, how you manage your money, and what your financial goals are. Once you've got a clear picture of where you stand financially, then you can start looking at different credit cards, compare what they offer, and see what really fits your needs.
It's like choosing the right tool for the job, right? You wouldn't use a hammer to screw in a light bulb. You need the right credit card for your specific situation.
Exactly. And just like you would read the instructions before using a new tool, you really need to read all the fine print on your credit card agreement. I know those terms and conditions can be a bit of a pain to go through, but it's so important to understand the fees, the interest rates, and basically all the rules that apply to your card.
Better to be safe than sorry, right? Don't be afraid to ask questions if there's anything you're not sure about. You can always contact the credit card company or even talk to a financial advisor to get some clarification.
Absolutely. The more you know, the better off you'll be, especially when it comes to your finances. And always remember, credit cards are just tools. They can be super helpful for managing your money, but they're not going to magically solve any financial problems you might have. It all comes down to using them responsibly and making smart decisions.
That's so true. It's easy to get caught up in those reward points and the convenience of credit. But we have to remember that there can be consequences if we're not careful. This whole deep dive into the world of credit cards in India has been a real eye-opener for me, seeing how complex it is and how important it is to stay informed.
I think it's been a really valuable discussion. We've covered so much, from the history of credit cards in India to what's happening right now and the potential risks. I hope our listeners have learned something useful that they can take away and apply to their own lives.
Me too. It's been fascinating to unravel all this information and really get a grasp on what's going on with credit card usage in India. I think the biggest takeaway is that credit cards can be a great thing or a real problem. It all depends on how you use them.
Couldn't have said it better myself. Stay informed, stay in control, and make those credit cards work for you, not the other way around.
Great advice. Well, that brings us to the end of our deep dive into the world of credit cards in India. Thanks for joining us on this journey. We hope you'll tune in for our next exploration.